Hey everybody, this is Jose Blasco. We are ready to get started with the session. 40 seconds to go. Let's have a quick sound check. It would be good if you guys could just type on the chat box that sound is good or just a quick hello, as we normally do. And with that hello, I know you heard me and therefore I know sound is good. So we are ready to start in 25 seconds. So let's go for it, guys. Would be very appreciated. A quick message in the chat box so I know we are ready to go. In the meantime, I will turn on the video stream here on the bottom right corner of the screen so I can say hello from here, from my little corner. And that way we're ready to start. Joe, good to see you. Fernando, good to see you. Thank you for those confirmations, everyone. Very good. It's the top of the hour. It's time to get started. So let me highlight the disclaimer as always. Please read it carefully. It's in the upper left side of the screen. The disclaimer is important information, so please do not skip it. Read it completely because, again, it's indeed important information. Thank you so much, guys. So let's get organized for today. So the plan is to talk about the platform top, how to use it. Of course, as you notice with item number 1 and item number 2, talking about trading software goes together with talking about trading. So we will often kind of like transition between a lesson or a lecture on how to use top together with a lesson or a lecture on how to do, let's say, an option spread, for example, or any other subject. So we're going to be talking about all of this, and of course questions and answers as well are welcome. I would prefer to go ahead and discuss a couple of topics that I have in my mind, and from there in the latest part of the session it would be ideal if you guys could phrase your questions in the chat box and then we can discuss it more in depth. Okay, so let's do that, and let's begin with the session here right now. So here we go. So we have top here, and if I was to remind you of something you probably know, which is we have a help menu, and you got the help just by either clicking on this option or hitting F1 on your keyboard. This will bring you to this particular help menu on your web browser, and from there you have a lot of very relevant information that guides you on how to use top. So the item I would like to discuss today, it's the strategy builder. Okay, and this again, I'm just moving throughout the materials. Okay, there are plenty of materials for us to address. How are you, Fernando? How are you, Mark? Yes, I'll take a look at your question in a moment, Fernando. Okay, let me go ahead first and cover the topic for today. Okay, so precisely I was going to say that the topics I'm going to be discussing and the sequence, it's indeed based on, let's call it, common sense from how to use the platform and what is more relevant, what is less relevant, etc., etc. But also it has a lot to do with the emails I received from you guys, the questions, etc., etc. And in that sense, indeed, it's going to be helpful to go through certain topics, and then in the second part of the session talk about questions and answers. In case one topic is more urgent and I didn't have time to address it today, beginning to the end, at least I can give you some answers related to what you need. Okay, so let's do that. How are you, Mark? Good to see you, my friend. So strategy builder is a topic for today, and we have it here and on the help menu. And again, one of the reasons why I'm looking at this as a relevant topic for today, strategy builder is right here. When you look at the left menu and you click on the button strategy, and it opens the strategy builder, right? So the reason why I'm looking at this as a relevant topic, to be honest, is because of a collection of reasons, but also because in my case, when I trade options, I like to really basically focus on extracting as much juice as possible from my options plays, which implies a lot of trade management during the life of the trades, okay, and running certain tweaks and adjustments and evolutions of your initial original positions in order to reduce the risk, lock in profits, enhance performance, and so on, as we have done, as we do almost every week when we run the live sessions in the YouTube channel and the private room in our website and all the other media places where you can find us, okay? But having said that, I wouldn't say that I am the most typical options trader. most of the options traders or most of the traders, or especially if you are in the investment side, probably are looking more as an options as a vehicle to benefit from leverage, and then do a little bit of a hands-off set and forget type of trading. And in this sense, the strategy builder is perfect because it's going to build your option strategies at the speed of the light. You don't have to do thinking. You put the trade on and you just wait, and that's it. So in other words, it's a very advanced way to do the very simple, the most simplistic approach of options trading in an advanced way, okay, with very limited time uses of your time, etc., etc. So in other words, the strategy builder, it's a very powerful tool that if I was to guess, and this is just a made-up statistic, but probably it's going to be the preferred tool among, let's say, 75% of the options traders using top. Where for the ones of you that may be more a bit like me, you know, a little bit of an options trader, more in the perfectionist side, being active, willingly being active, ready to manage and extract more performance from those positions via trade management, and therefore ready to be on top, in front of my screen every day, ready to spend more commissions with more executions. So if you are like that, then we'll talk about other tools. But I would say this is probably going to be the minority of options traders out there. Okay, so in other words, I think that this is a very good place where to start when it comes to start utilizing and learning options tools in top, because also what we're going to learn with the strategy builder today can be kind of extrapolated to many other tools that we will learn later on in future sessions, which are more advanced, but also the philosophy on how to use the platform it can be extrapolated, as I was saying. So again, I think that going from the very, very basic topic that we covered on our first session, that was the pages, right? So how to open a page, how to close a page, that was, again, such a so interesting topic, but very relevant to make sure that you don't lose data, okay? So going from that, we are now getting into the strategy builder, which is a trading tool, and it's one of the most basic ones, even though it's very advanced, but it's very basic when it comes to the use of it. And from there, we will be moving into more advanced, functionalities and possibilities within the platform. Okay, so that's why we are moving today into the strategy builder. Okay, so what is the strategy builder? Well, the strategy builder is a tool that allows you to determine the best spreads for a given trade setup. So in other words, you need a trade setup, and we need to define what is a best spread, because best for a trader could be not so best for another trader, depending on your trading plan. Okay, so what do we mean by best? Okay, well, what we mean by best in this case is pure return on investment. How much money you need to execute the trade out of how much capital you will get from this trade, assuming you're right. That's performance. Okay, that's a very pragmatic way to think of performance, return on investment, and that's what we mean by best. Okay, so when we create our spreads, okay, you will see in a moment that there is a return on investment column on the strategy builder, and we're going to be able to sort based on performance and basically shoot for those trades that are the most optimal trades from that criteria. But also those trades come from a specific trade setup. Okay, and one thing that we need to know about the strategy builder is that the strategy builder is a tool designed for you to be a directional options trader. Okay, the moment it's time to plan non-directional options trades, so then we'll have to talk about other type of tools. Okay, but when it comes to being directional, that's when the strategy builder comes into place, which again, directional trades in options trading are easier to understand, easier to execute. It's kind of straightforward. If the stock is moving your direction, you make money. If the stock is moving against you, you lose. So, again, coming back to my made up statistic earlier, I would expect the majority, earlier I said 75%, it could be any number really, but I would expect the majority of options traders to be on the directional front, and only the most advanced options traders, which are going to be a minority, to also run strategies such as iron condors, double diagonals, horizontal spreads, things like that, which are non-directional strategies. And there you are playing theta, you are playing vega, you are playing other Greeks, you are playing you are playing other games with options, which are less dependent, I should say, on what the stock is doing, directionally speaking. Okay, so for that, the strategy builder is not ideal at all because it's not designed to do that. The strategy builder is designed to be directional, and that implies that you have a trade setup. So your trade setup could be anything. Okay, you may be looking at a chart, and I'm just gonna open a chart. A moment ago, Fernando talked about Elliott wave. So maybe you are an Elliott wave trader. You had an indication there, and that is your triggering condition to get in. Okay, even though now we just got an Elliott wave indication to short. So you will either go long or go short depending on those indications. If you're an Elliott wave trader, maybe you trade moving averages like I have here on the left. Maybe you trade Bollinger Bands. Maybe you are purist. You're a purist trader using the AutoUFOs, which is, as you probably know, my favorite style. But again, all of this is very personal. So whatever is your trading style, the point is that in order to use a strategy builder, you need to have a trade plan in place. You may use different time frames, whatever it is, you need a plan in place. And the key component of that plan is your target. That's the key component of your plan. So in other words, let's say you are looking at this is the S&P, for example. Okay, let's do this with we can use a stock, for example, maybe McDonald's. Okay, I'm just making this up. Okay, so maybe you're looking at a McDonald's. This is a 2-day time frame. Okay, as you can see here. Okay, it doesn't need to be a 2-day time frame. It may be the 60-minute time frame. It may not be McDonald's. It may be you name it. So let's say this is your trade. Maybe you are relying on a UFO to take a trade. Maybe you are a breakout trader, and you can see how that stock is now basically starting to challenge this pivot high right there, and it's kind of poking through, and you're like, okay, so if it's gonna continue and go above my purple line, I want to go long. Okay, so you may be a breakout trader, you may be a retracement trader, you may be a Fibonacci trader, you name it, right? So no matter what your trading style, you will be able to use a strategy builder as long as you have a target. So built-in top, and we'll talk about this in future sessions, there is something called the speed bumps. So maybe you plot a speed bump there, and that speed bump, okay, you know what, let me make this a bit larger like this so we can see that much better for everyone. Here we go. So that speed bump may tell you that the target, if you are conservative, it's 251. If you are less conservative, it's 252. And if you are not conservative at all, it's 254. Okay, so let's say you go with a 252, and that's your target. Okay, and again, there are many other ways on how to set the target. Maybe you are a Fibonacci trader, and you are just doing some sort of a projection from here to here to here, and that tells you that your target 100% extension is 254, and then you go for 254. So again, every trader is a different story, and I'll say it one last time: there is no right or wrong on setting your targets. Okay, give me 1 second here because it seems that for whatever reason I'm not clicking in the right place. Here we go now. Okay, so no matter your trading style, the key is that you have a trading methodology that not only defines your entry but also your exit. Exit could be exit to be right, exit to be wrong. Typically, an exit to be wrong would be a stop. If you're trading stocks or futures or Forex or crypto, you would have a stop in place. I'm not talking about that one. I'm talking about your target, which is your exit when you are right. When do you close the trade for a profit, right? So in this case, in this example, I'm going to use 252 as this example, okay? So the moment you know your target is 252, what is it that you do? That's when you bring in the strategy builder, okay? And again, depending on how you have the windows linked and all of this, so it may already show you your right symbol. Of course, step one, just make sure you have the right symbol in place, because it could be that, maybe you went for another symbol. I don't know, maybe you looked at Facebook, right? And then you're like, oh, I like Facebook, so let's do a trade. And then you come back here, and now you think you are looking at Facebook, but while your chart is Facebook, here you're still looking at McDonald's. Why? Because I didn't have my strategy builder linked. Okay, my chart is blue color, but currently it's not grouped, it's gray color. So just be careful with that. You may choose to link it, you may choose to not to link it, whatever it is, just make sure the symbol is the right one. And then the next step, okay, which is the key, really, is to input your target price, where it says none. You will now type 252, and the moment you type 252, you can just enter, and then all these option strategy will pop up, which I need to explain what they are. Okay, so again, if I close it, just to restart, you come back to the chart. Okay, you have set your target. Okay, 252. Okay, here is where it is. Okay, and from there, okay, you can either let me see, you can send it right there to the strategy builder with the target selected by right-clicking on the screen and select strategy builder target 252.17, which is where my mouse was before I right-click. Okay, you can do that, which is very quick, or you can do it manually by launching the strategy builder, double checking their symbol is the right one, and then you type your price 252, or if I want to be that precise, 252.17, and then hit enter for the trades to load. Okay, of course, I guess you are with me. The right click shortcut, it's pretty handy. So again, I'm going to do it one more time so this is clear for everyone. You will just place your mouse where the target is. Okay, and in this case I am placing it at 252.26. Okay, now I am exactly where I was before, 222.17. So you will right click, go to send to, and then select strategy builder with a target 252.17. And when I click on this option, it will open the strategy builder where the target has already been filled in for me and the strategies have been built for me automatically at the speed of the light. Okay, so probably this is the best process from an efficiency point of view of you do whatever you have to do with your charts. It's almost like you have no idea how options trading work, and of course it's not like that, but bear with me on this for a moment. So let's say you have no idea on how options trading work. You did your whole planning on the chart like if you were to be a stock trader who never traded derivatives, options, and then you just right click and then you select the strategy builder, and automatically next thing you know, you have a collection of trades that are now ready to use by you in front of you on the screen, which now we're gonna look into them, so we learn how to read this. Okay, and therefore what selection is it that the one you're gonna make. But anyway, please give me a little comment there on the chat box just to confirm that this so far this little tour I am giving you to get to the strategy builder with the data you need, it's well understood, because now we're going to get into, okay, now that you got the trades planned for you, so which one do you pick? Okay, why? How do you do it? How do you assess it? Etc. etc. Okay, so give me some feedback if that's okay. Thank you so much. Very nice, guys. Thank you so much. Thank you. Good, perfect. And thank you for the compliments on the tool and the platform as well. Okay, this is of course very appreciated. So anyway, so now I'm just gonna maximize this, okay, and I'm gonna float it. Okay, I'm just gonna float it and maximize it. Okay, so it's like full screen all the way. We don't need to go that full screen, but since we are talking about the strategy builder, let's maximize it all the way so the focus is clear and what is it that we're looking at. Okay, so now what is it that you can see? Well, on the left you can see a collection of options trades that were planned by you, by the platform for you. You can see there are bull call spreads, bull put spreads, calls, straddles, triangles, all sorts of things. Again, I'll come back to this in a moment. On the right, we also have risk graphs. The green part is where you profit, the red part is where you lose. Again, there is a lot of information on the screen. While the strategy builder, it's extremely powerful, and it's, to be honest, it's almost magic, right? On how the trades have been built at the speed of the light, and that's it. Those are, without even looking at it, you know if you reach the target, those are the optimal trades to take. So while all of this is true, there is a lot of information on the screen, okay? And even if I hide the risk graph even more, and to be honest, this could be a bit confusing or even intimidating, right? So I want to lead you into how to use this So this, becomes very simple. Basically, like many other things in life, it's all about knowing what is it that you need to look for, or where is it that you need to look at. Okay, and by doing that, this will become, like crystal clear. Okay, you will see how this is going to be extremely simple. Okay, but again, coming back to this in just a moment. Okay, so I want to go back to the help menu. Okay, so as you know, and also as you are reading the help menu, you will see often, actually, you will see some divergences from what you have written here versus what you have on the software. And the reason why is because we just keep producing updates and more advanced functionalities, and sometimes it's difficult to keep up speed with the user guide. In a perfect world, it will go in tandem, in perfect tandem, but at the same time, in the real world, we have to give a priority, and we prefer that, while documentation is key, because many of the tools are quite intuitive, so we prefer to give priority to developments more than documentation. So sometimes you will see slight differences with the manual and the platform. Okay, so no worries about that. Expect that to be the case. Okay, because again, that's our philosophy when it comes to what to give priority to. Okay, for sure, feel free, if there is any question anytime, shoot an email, and we can help you clarify that. Okay, so again, when you click on the strategy builder, okay, it gives you all this detail. You have also a section on the risk profile, which again, I'm going to explain that much better later on the screen. In the end, a risk profile is a risk profile. So let me explain that in a moment. Even if the risk profile is in the strategy builder, in the end, it's very similar to the risk graph tool, which is another tool that we'll discuss another day. Now, the risk graph tool is a risk graph tool by itself, so it has more functionality, like the compare spread functionality, for example. So you can do more with it, but in the end, a risk profile is a risk profile. Okay, so it's going to be very similar. Okay, so coming back to the strategy builder. Okay, so we have the risk profile and also the results, which the results really is probably the most useful screen for you to look at to determine and confirm that this is the trade that you want to take or not. Okay, so again, it's all about knowing what to look at depending on your trading style, what's important for you, because as you can see, the strategy builder is actually building strategies of a different nature. Okay, so I'm going to start with that. Okay, so I'm just going to, first of all, I'm just going to hide the risk graph. So we get this little bit overwhelming view. Okay, if you are not used to options trading, it's going to be like, oh, that's a lot of data on the screen, it's too much, So first, notice that on the left, it's sorted by strategies. Okay, which you can change that, of course, but by definition, by default, is sorted by strategies. And by the way, you have 3 of each. Okay, 3 of each. Sometimes the number may be different than 3, but by definition, normally, in most of the cases, unless you got missing strikes or missing expiration days or things like that, normally you would have 3 examples of each strategy. You can vary the amount of examples, okay, and then you click update. If I did 4, so now you got 4 of each. Okay, well, you can see what I just said. Sometimes it's not possible, and that depends on the availability of strikes and expiration dates and so on. So there are times where it's possible, there are times where it's not. It also depends on the minimum strike range. So I'll talk about this in just a moment. So I'm just going to go back to 3. Okay, but the first thing I want you to know, and again, probably most of you watching this session live or watching this video recorded, you know what's a bull call spread and a bull put spread and a long call and a long straddle and a long strangle. But in case you are not fully introduced to options trading yet, so I just want to point at the key differences between those strategies, because this may be one way on how to filter out this table. Maybe the only thing you care about is the bull put spread, and then you can ignore the rest, even though it's automatically planned for you, but you can just ignore it because the characteristics of a bull put spread, which is what we have in the second place here, okay, the characteristics of the bull put spreads are very different compared to the characteristics of the bull call spreads. They are both bullish. Okay, why? Because obviously the current price of McDonald's is 247. We set the target to be 252. So obviously all the trades that are being planned are bullish. They will make money if the stock goes higher, because this is designed to make you money if the stock goes higher. because your target is higher than the current price. Okay, so all of the strategies are going to be bullish. Okay, so in that sense, it's all bullish. But while it's all bullish, the bull call spreads, okay, they are what in the options world is called a debit strategy. And because they are a debit strategy, it means that you pay for those options. And because all options got an expiration date, which right here is set as November 19, we'll talk about why November 19 in a moment. But because all options got expiration dates, it means that on that date, the value of the options will be 0 unless the stock went higher. And therefore, the options are what we call in the money. And therefore, if the stock was not to behave the way we want it to behave, so then when you reach that expiration date, everything you paid, the debit paid, is lost because the option expired and therefore is now worth 0. And because the stock didn't move the way you wanted, whatever you pay for those options is gone. Okay, so bull call spreads are debit strategies. Long call is also a debit. You buy for the call. Long means you buy. Okay, just you are not long stock, you are long the call. So you buy the call. Just like when you sell long stock, you buy the stock. In this case, you say long call means you buy the call. Long straddle means you buy the straddle. Long strangle means you buy the strangle. So guess what? All of this is also debit. So no matter what it is, if the stock moves your way, they're gonna pay you. But if the stock doesn't move your way on the expiration date, all of this would become 0, and whatever you paid for it, the debit, is lost. Okay, that's the most you can lose. What you pay for it is called debit in options trading. Whereas the bull put spread is a totally different animal because that's a credit. Okay, a bull put spread means that you are selling options. It's still bullish. That's why it's called bull put spread with the word bull. But if you know about options, the call is what you buy when you think the stock is going higher. The put is what you buy when you think the stock is going lower. The classical way to remember this, if you're new to options, is that the phone rings, you pick up the call, so the hand is moving up, so the call is to make money on the way up. You are done talking on the phone, you put the phone down, so the direction of the hand moving is going down to put the phone down, so you buy puts when you think the stock is falling, right? Well, but this is bullish with puts, right? So if it's bullish with puts, which we said puts make money on the way down, so if you are bullish with puts, how can that be? Well, there is only 2 things you can do in trading, which is buy or sell, right? So if the put makes you money when you buy it and the stock falls, well, if you sell the put, it's going to make you money when the stock rallies. And what happens when you sell something? When you sell a put, or when you sell something in life, whatever it is, you get paid. When you buy something in life, you pay for it. That's a debit. But when you sell something in life, when you sell a put in this case, you get paid. In other words, you collected a credit instead of paying a debit. So it's a totally different animal. Some of you guys in the session, some of you watching these sessions as recordings, you may be credit traders, and that's the only thing you will do for the rest of your life as an options trader. You once decided you wanted to be an options seller, and that's what you do. And there is nothing wrong with it as long as you do it the right way. Some of you may be like me, multi-style options trader, and you do all sorts of strategies depending on what you want to have in your portfolios, what the market is offering at the moment as a best opportunity, whatever. But again, there is nothing wrong with using only a few specific option strategies as long as you use them the right way at the right time. Okay, so again, some of you looking at the strategy builder may be looking at other strategies, happy to execute any of them, knowing that the strategy builder is optimizing them for you. Some of you may be like, that's the only thing I do is buy calls. That's all I do. I'm not going to do spreads. Too complicated for me. I'm just going to go for the calls. That's it. So then you have your decision there. Some of you may be like, the only thing I do is credit spreads, bull puts. Okay, so that's the only thing I do. So in this sense, when the strategy builder is creating all those strategies for you, then it's very simple. You can go ahead and ignore many of the rows. And if you were to be a credit options trader, so you would only focus on those 3 rows, and then you can go ahead and look at the information in those 3 rows and ignore the rest. If you are like me and you are trading all strategies, then you would be looking at the whole set of possibilities because you are ready to execute whichever is best for you. Okay, cool. Okay, so again, this for the ones of you who trade options, it's really obvious. Okay, and you were probably thinking, that I spend too much time talking about it. But for the ones of you that are new to options trading, again, you may be overwhelmed by so much information on the screen, and hopefully you appreciate the fact that you may not need to analyze the whole thing. Maybe you only look at 3 rows, depending on your options trading plan and your options preferences. Cool. Okay. So now, what else? Okay. So I would like to observe a little bit more some of the different areas where we can input data in the platform. Okay. So target price. Okay. So we talked about this already. Okay. And again, if you right click from the chart, this is going to be input for you automatically. If you want to rectify, you can just click and type. Number of results. Okay. By definition, is going to give you 3 results for each of the strategies that you will be presented with. That is normally more than enough. But again, let's say you are using a super liquid market like the S&P 500 or some stock which is very liquid. I'm thinking Microsoft, for example. So, could you use more results because you have so many strike prices in the option chain? Again, the more liquid a stock is, it also depends on the price of the stock, but the more liquid those options are, you may end up having more strike price increments, isn't it? So you have, instead of $5 at a time, you may have $2.50 at a time. Instead of $2.50 at a time, you may have $1 at a time. Sometimes you have 50 cents at a time. It all depends on, the price of the stock and the liquidity. So there are times where you may want to explore a few more choices. Okay, nothing wrong with that, but I would say that 3 is probably good enough in most of the cases, and you will get the optimal result, with those 3. Okay, but you can always play with it based on your own criteria. Now, the target date, okay, it's something that will pop up automatically for you if you have selected auto. Okay, if you have selected auto, it will pop up automatically for you the moment you have a target. Notice if I, instead of 252.70, I'm just going to change this to 282.17 and I hit enter. Notice how the date is totally different. It's 10/21 and automatically my expiration dates are January 20, where if I go back to 252.17, 1, 2, 3, enter, then the date is October 31st, and then the expiration date used is November 19. So again, the moment you have the target in place, if you have selected auto, so then the date will show up for you automatically. Now, it will show up for you automatically, which, to be honest, that would be my recommendation, okay, to make it very simple. And it will show up automatically depending as well on what is it that you have selected. Did you select it that you wanted the anticipation of the target date to be done based on historical volatility, or would you want it to be done based on the continuous implied volatility mean, or the implied volatility of the call side only, or you want something custom and type a volatility value yourself, or also what's the duration? So historical volatility of the last 10 days, historic volatility of the last 45 days. So again, you could certainly change these metrics based on your trading style. Let's say you are planning a long-term investment. So maybe instead of 45 days, you may look at 90 days, 180 days, half a year. You could do all those things, but to be honest, it doesn't make sense to be that perfectionist, because the tool already got plenty of intelligence built in. So just to give you a little insight on what's going to happen when you type a target date. So what's going to happen is that the platform is going to be looking at this type of technology, which are the probability cones. Okay, so we'll talk about probability cones in a different session. But in case you've never seen this tool before, so what the probability cone is going to do is take a specific type of volatility. In this case, I'm going to use the dark blue, for example. So I'm looking at historical volatility in the last 63 days. Okay, and by the way, for the ones of you options traders, you know what's historical volatility. For the ones of you out there that have never traded options before or have limited experience, so basically, historical volatility means the speed at which the stock has been moving in the past. That's what that means. Okay, the real speed of movement of that stock. Okay, in the past, in this case, in the last 63 days, which is 3 months. Okay. So if I plot that, okay, I get the dark blue line, okay, and if I look at the intersection, like for example, let's say I'm looking at November 5, right, and I look at the intersection of that dark blue line and November 5, which is that expiration date, you can see how we have a number there, which is 259.39. So that would be the expected reach for that stock in a 1 standard deviation case. Again, if I go back to edit study, probability con, notice how I had selected here. This can be customized. Probability, I have it as a 1 standard deviation, which is 68.2689, and therefore, that dark blue line represents that. So what we are doing with a strategy builder is that we are looking at something a bit closer to represent a bit more what's happening now for the stock, 45 days instead of 63. You can vary it, okay? Again, I would suggest not to spend too much time with it because there is no perfect value, or if there is, it's changing. So you will never know until after the fact, which is too late. So 45 seems to work quite well. And the reason why I'm pretty confident about that as well is because on top of this type of probability projection of price into a future date, what the platform is going to do as well is to run a regression line on those probabilities. And basically those regression lines are also set up with a 1 standard deviation. So, with the two values, we perform a pretty complex calculation, which is going to end up giving you a pretty valid and pretty accurate date when it comes to the date in which we expect to reach that stock price value. Now, could the stock reach a target in 1 day, in 1 hour? Yes, of course. That would not be expected at all, and it would break every single probability, but that could happen. So this is just an estimation. And because it's just an estimation, the other thing that could happen too is that the stock may reach the target late. Instead of reaching on time, the stock reaches late. So you will notice how the expiration dates that we have been selected are of a little bit of a longer duration, precisely in order to make sure that when you get there, if you get there a bit late, you still had time to get there, and those options have not expired yet, on October 31st in this case, okay? So again, those are key parameters when you plan your trade. Target date is automatic by default based on volatility, 45 days, okay? The expiration mode, November 19, it's also set as automatic. So what the platform will look at is it will look at the various expiration dates available, the distance between strikes that you set here that are available. It will look at the various return on investments that are available with those various expiration dates, and automatically it's going to pick for you the expiration date that seems to be the most optimal and that gives you a little bit of extra time. Okay, this is what it's going to do by default. So again, I would say it makes a lot of sense to leave it as auto, even though the choice is yours. And you also have other choices, which is pick the nearest expiration date as possible, pick an extended one, which is give yourself more time. So if I select extended and I click go, instead of November, now it's giving you December. So you're giving yourself extra time. Good news, now you have more time to reach your target. Bad news, the cost of the trade is more. Okay, so when you look at the return on investment, so now it's 26% versus when you do the auto, which is supposed to be good enough. So instead of 26%, so now you got 20%. Actually, it's more efficient if you give it more time, but also the reality is less efficient at the same time, because given your expected date for the target, if your option expires so much later than that, you are also giving the opportunity or the possibility for that stock not only to reach your target, but to go ahead and turn around and now move against you after reaching your target. Okay, so in other words, you want to, trading, like everything in life, really, it's all about timing. So you want to make sure that your timings are as accurate as possible, looking for that sweet spot balance where you are as accurate as possible with your target date approach, as I just discussed, while you are also giving yourself a little bit of extra amount of time in case the market moves more slowly than expected or with less decision than expected. But if you give yourself too much more time, so now it's kind of like, there's a lot of hope there, and then the mathematics will show very good results in most cases, but the reality is that then the stock may go against you all the way because you are giving the stock too much time to do whatever it wants. Okay, so again, putting on the side that you can close your trade anytime you want, you don't need to wait until the expiration date. The simulation is thinking in those lines. Okay, and then finally you can also select your minimum strike range, okay, which this will have an impact on risk and reward. So this is something that you could also play with. Okay, so if I go back to my, yes, I got auto for expiration date, and you can see 20%. So if instead of 2.5, I use 5, okay? So notice the 240 to 250, okay? That's $10 of increment. So if I do 5, I'm still getting, 240 to 250. Why? Because 5 is less than 10, and this is the minimum. Now, if let's say I say I want minimum 30, and I click OK. So now I got 240 to 270, and you can see how the performance is less. Okay, so again, it's less optimal, but since I force it to be a minimum of 30, so then the platform is giving me what I'm asking for. So as a rule of thumb, typically what you want to do, which is what comes by default, is that you want to select the minimum value available, which that depends on the option chain. Okay, if I change to another stock, so let's say I look at, let me see. I'm just thinking, if I look at STX, for example, this is an $80 stock. So the minimum strike price increment could be as low as 50 cents. Okay, it's a cheaper stock. I got more strike prices available. So, I could do that. But again, with McDonald's, okay, McDonald's is currently trading at $247. We had a target set at 252.17. So when you look at the option chain using November 19, the smallest strikes available is 2.5. So you cannot go lower than that. And by definition, by default, this is what it will give you, what will be given to you. In most of the cases, because it's the minimum, it will actually give you the best performance. The only case where there may be an exception is if your goal was to do bull put spreads. So wider spreads, where the minimum strike range is a bit wider, may give you a bit more premium in exchange for risk. That makes sense. So then you may want to play with that. That would be my only exception there. But most of the times, for everything else, is going to be the minimum strike range is going to give you the best results. What else do we have? Okay, as we said before, a number of results. So again, I said that 3 is going to be good enough most of the times. Also, you got the at the money. So at the money, out of the money, way out of the money. So again, this comes down to your trading style. Just like what I said earlier, some traders may only do credit spreads, for example, and that's the only thing they do. Other traders may only do debit spreads. So depending on your trading style, you may have rules when it comes to your option selection. So just keep that in mind when you use way out of the money option or out of the money options. So what's going to happen is that you're going to make your trades cheaper. So those return on investment are going to look much better, but you really need to hit your target on time. If you are late, forget about it. It's going to be very disappointing. Okay, so a conservative approach, and therefore, again, this is your choice, but if I was to share a preference, I will go for at the money, because you will make the trade a bit more expensive, but you are also giving yourself the opportunity to be less precise with the timing, in the sense that the stock may need time, and the stock is thinking about it until the stock finally picks up direction with decision. And again, time passing, especially with the debit spreads, is a problem. So at the money options are going to alleviate a bit better that effect, because the moment the stock starts moving, you start getting what we call in the money. You start getting what we call intrinsic value. Intrinsic value does not decay, right? And now you're going to be okay. Where if you're using out of the money options, again, you really need the stock to move to your target, and this needs to happen quick. Okay, I'm not saying this is wrong, but I'm just saying at the money is more conservative. Actually, at a higher level of options trading, I normally always go slightly out of the money, with other tweaks, okay, that we will discuss in other sessions. But again, if you are looking at a strategy builder, the way I phrased at the beginning, which is to keep it very simple, to keep it safe, maybe you are less experienced with options trading, or you want to keep it simpler. And if you want to keep it simpler, odds are that you want to keep it more conservative. So then probably at the money is the choice, just like auto, minimum, all of this is the choice. Okay, what else? Maximum risk. Okay, so by definition is on check. You can certainly check it, and that makes a lot of difference. Okay, because some of these trades, okay, as you can see here with the debit, for example, so some of these trades require $627.50 of debit, $2,973.50 of debit. And as I said before, the debit is what you pay, and if the stock doesn't move your way and you reach expiration date, all that debit will be lost, right? Unless the options are in the money, and then you may make some money or you may lose less. But if the stock really didn't do anything for you and you reach expiration date, you're going to lose your debit. And if your debit is 2,973.5, that means that you just lost 2,973.5. And maybe this is not part of your risk management rules. Maybe your rules say the most I want to lose is, or the most I want to risk is, $500. Okay, so then it would be convenient to select max risk and then input what is your maximum risk. In this case, I'm going to assume $500, and then you click OK. And the moment you do this, all the trades that have more risk than $500 will be eliminated from your table. So that's another great way to really simplify the planning of your trades, in the sense of removing a lot of data that is not relevant to you, because your trading plan says you don't want to risk more than 500, and all the other trades got more risk. Okay, so that way you are filtering out what that doesn't work for you. Mark, credit spreads you would want to choose out of the money, correct? Well, with credit spreads, let me guess your thinking, okay? Because the credit spreads that are being built by the strategy builder, such as the bull put spread we have on the screen right now, okay? This bull put spread is a bull put spread where you are getting a fair amount of delta. So it's a directional strategy. Remember what I said at the beginning of the session. I said the strategy builder is for you to be directional. Okay, now of course, when we talk about credit spreads or bull put spreads or better call spreads, it's very, very common. I would say the vast majority of options traders who are credit traders, they probably go out of the money because they are looking at the bull put spreads as a neutral play. They are not looking at the bull put spreads as a directional play. They are looking at a bull put spread as a neutral play. And this is the beauty of options trading. Okay, options give you options, right? So I say that millions of times, isn't it? So think of this. Okay, so let's say the stock is currently trading somewhere here. Okay, that's where the stock is. If the stock is there and you are directional, so you want to take a trade with options which are fairly close to price, somewhere here. So if the stock moves, those options start making money quickly, right? Because if you buy them, they are getting in the money. And if you sell them, okay, they were at the money, okay, and now they are out of the money. Therefore, delta is dropping. The drop in implied volatility, the drop on premium values is going down because you totally lost intrinsic value, and now it's all about time decay, and also the extrinsic value of the option also changes as the stock is moving, not only because of time decay, because of the stock and volatility and so on. So in other words, if your bull put spread is very close to the current price of the stock, while a bull put spread can be used as a neutral play, now it will be quite directional. It will have a pretty nice delta. Notice that if you take 80 delta minus 55, okay, you end up with 25 delta. So this is a 25 delta. Okay, and this, I'm just being a bit advanced here, okay, going a bit beyond what the strategy builder does. You got a 25 delta directional play with a bull put spread. So it's a credit strategy, but you are directional. You are not neutral. Okay. Now, another way to play the bull put spreads, which is probably what the majority of bull put traders do, or credit traders do in general, is that, the stock is here. Okay, that's where the stock is. Okay, and they're like, okay, so here below there is a UFO. Okay, and here below there is another UFO. Okay, and the stock is currently up here. Okay, so in other words, I expect the stock will go higher, but instead of selling my puts right here, where if it doesn't go higher, it's hurting me immediately, I'm gonna sell my bull put spread down here. Okay, this is where the bull put spread would be. Okay, and if the bull put spread is that low, so what happens? If the bull put spread is that low, now you could afford the stock to, go sideways, do whatever, and as long as the stock doesn't go below this price point until the expiration date, before the expiration date, so even if it's coming like against you badly, but then the options expire and they were here, right, so close, but now the options expire, you still made all your money. Even though the stock moved against you, it never went up. Why? Because that was a neutral play, because the options you sold were out of the money or way out of the money, but that's not really directional, isn't it? It's more neutral. So again, could you plan that with a strategy builder and select, way out of money options? Yes, you could. But the reality is that I will not do it like that. And the reason why is because the strategy builder, number one, is designed to be directional more than neutral. Second, because for you to be neutral, you will need to do a proper assessment of the chart, where you will need to find out where are your UFOs, where are your other conditions that make this neutral trade to make sense. Where, remember, the beginning of the story was we set a target, which means you are directional. Okay? So in other words, trying to plan bull put spreads in a non-directional fashion, in a neutral fashion, using the strategy builder is doable, but it's not ideal compared to other tools I will be sharing with you in future sessions. Okay? Long explanation there, but very important one. That was for you, Mark. Maka, a great feature. Thank you so much, Maka. Fernando, can we place a trade straight from here? Yes. The version I'm using with trades with a top right now, it's the options planner for QC. So this is the quote media version of top, meaning that my version of top, the one I'm using right now, only has market data. It doesn't have execution. Okay. But for the ones of you that have top for TradeStation, okay, or any other broker integration we will have, so you can right click, and it doesn't show on my case, but let's say you want to take the first trade, so you just right click, and the first option on the top, okay, the first option on the top is going to be trade ticket. So you can right click and send a trade ticket, and therefore you can just take the trade from there just by right clicking. Okay, speed of the light. Good. Question about delta. Why would you want high delta on a credit spread? You have higher probability being in the money versus low delta. No. Well, it depends on your trading style, Maka. You have a very good point, but also my answer to you is it depends. So let's say you are trading a stock where at the current time the implied volatility is to the moon, and you have so much premium that, and you want to be directional, okay? You want to be directional, but you have so much premium that buying a bull call spread is going to be so expensive that it's going to make the return on investment of the trade to be very bad. Where if you do a bull put spread with a lot of delta, you're going to get so much more credit than what you would make if you did the bull put spread, if you did the bull call spread and caught the move all the way to the target. Okay, so there are cases like that where when the premium is very high, a bull put spread close to at the money or at the money will pay you more than a bull call spread, because the bull call spread just became way too expensive. So the return on investment is very bad. Okay, apart from the risk of the trade is also very much higher. With the bull put spread, no matter the premium, the risk of the trade is the distance between strikes, no matter the premium. Okay? I mean, the premium will reduce the risk even more, but no matter what, you cannot get worse than the distance between strikes. Where with the bull call spread, as long as implied volatility rises and rises and rises, the cost of the trade could be infinite. There is no limit on how expensive the bull call spread can be. Okay, so so in other words, it could make sense if you are directional, which is the whole story since we started at the beginning when I said strategy builder is to be directional. Okay, of course, the majority of credit traders, when they talk about credit spreads, they're thinking, and I can see this is what just happened here right now, which makes a lot of sense. The thinking is, why would I be directional? I'm a credit trader. I'm selling options far away, hoping price doesn't go there. That's a very valid strategy if you do the right way, but that's a different strategy. And in that case, you will not use a strategy builder, since the strategy builder is designed to be directional. Okay, very good. So it's important, guys. I don't mind to re-emphasize, because like everything in life, all tools are great, but when you use a tool for the wrong purpose, then you get in trouble. Okay, so you guys need to understand the strategy builder is amazing to be directional. If you're not planning to be directional, we'll discuss other tools. Very good. Good, Mark. Fernando, populate trade ticket. Exactly. Very good, Maka. Great point. You didn't think about that. Very good. Perfect. Love it. Okay, so let's continue. So we got the max risk. Okay, then notice that sometimes, even though the trades are optimized, the problem is that you won't make money unless you reach the target sooner. And this often happens when the targets are a bit too close. Okay. When the targets are very close, it's difficult to make it work well, especially if the strike price increments are $10 at a time. Every option chain is different. So there are times where you just cannot get a trade strategy to perform. You just cannot. Unless, for example, you were to reach your target all the way on the expiration date, for example, or something like that. Or maybe you have a skew that is killing you in that case, okay? So we'll talk about skews in another session, but not every options price is priced at the same level. So typically, we have what we call an options mile, okay? The volatility is mile. But notice how sometimes there are divergences. So this blue line should go like that, and instead of going like that, notice how this dot is lower than what it should be. Okay, so that means that strike is cheaper than what it's supposed to be. So let's say you are selling that strike. Okay, if that strike you are selling it and it's cheaper than what it's supposed to be, well, good news, it's going to give you the delta you need, but from a risk and reward and risk of the trade point of view and so on, it's going to be bad. Okay, and it may hurt your return on investment. So again, one thing is the theory about options, a different story is the real pricing. And sometimes, even though you plan a trade in a proper way, there is no way to optimize it, so the return on investment is positive. So what do you want to do with that? Hide them. You can just hide the trades that didn't work. Okay, and now you are left with less. Okay. Also, calculate P&L using what? Auto. Okay, so again, my recommendation is to calculate auto. So you utilized auto when it comes to the target date. Okay, to calculate the P&L, I would just do the same. But again, maybe you want to be more aggressive, which is okay. So let's pretend my target date is on October 31st, giving myself time because I'm looking at historical values. But I want to calculate my target based on implied volatility, so I'm expecting to reach the target sooner. So you can play with things like that, and of course, this is going to create different values. Okay, but again, now we're trying to predict the future, and probably the models that are built in top and the strategy builder with the auto function are going to do a better job than manual changes. Even though you may run a few what if scenarios that may help you to conclude which trade you want to take. For example, in this case, we got 17.7, 16.7, and 17.4, which are very similar performances. So you may go here and be like, okay, so what if we reach the target based on the implied volatility? Okay, so now I got the same value. Okay, so very similar. Okay, what if if it moves, in the last 5 days, let's pretend the stock was very slow. So what if we reach those targets? So now we got no results. Okay, because that means that basically you would not reach the target on time. You got all the way to the expiration date, and the options expired. So it's all gone. What if we look at the 90? So now the return on investment is 10%. So these things may help you to conclude, I'm going to take the one in the top, the one in the bottom. Again, to me, that's a little bit of overthinking. To me, the strategy builder is designed to kind of plan the trades in autopilot mode, and I will just leave it all as auto. That would be my preference. But for sure, I'm just discussing with you the functions and why they are there. And now it's your time to play with it and design what works best for you, so you know how to use it in your particular case. Okay, but anyway, let's say you got here to the end picture, and now you are sorting those trades based on the return on investment. Again, you have plenty of data on the right, which is very relevant, such as probability of in the money, probability of break even, theta, vega, gamma, break even up, break even down. You have a lot of data which is very relevant, but typically confusing for traders that are looking at trading options simplistically, and probably too simple for people that are looking at trading options in a very advanced fashion. We have other tools to do that, such as the spread select, for example, which is another tool which we'll discuss in other sessions. So my view of this is probably the best way to get to decide which trades to use is to unhide the risk graph, okay, and ignore, lots of those columns with a lot of, additional data, which it's indeed important, but not that conclusive to deciding which trade is best. And then you can just sort your trades based on the return on investment. And, in case you want to understand a bit more of the, how these trades are going to work. So what you could do is, once you select the trade you want to execute, in this case, the bull put spread, so then you can just move the slider to understand better how your P&L changes through time. Okay. And, assess your risk, your reward. You can also assess the risk and reward here, actually, on the very right column. Maximum risk, maximum reward. So 327, 672, 329, 670. It's almost the same, isn't it? But again, sometimes it's not almost the same. And by looking at the red area, looking at the green area, and then playing with the sliders, you will get a better understanding of your trade. And this may be the final decision you need to decide, okay, that's it. I'm going with the bull call spread. And then you can just right click, populate a trade ticket, or, just place this trade manually with whatever options platform you use. And now you will know you are trading the November expiration 250 call and 260 call, where you buy the 250 and you sell the 260, long and short. Long is buy, short is sell. Okay. And that's how you use it. So again, it's super simple. It has many functions. Probably, if you end up using this tool, if this is a tool that you will use on a regular basis, probably you're going to leave it in autopilot mode, which is probably the wisest choice, I would say. Okay, again, my preference. Make sure you play with it to find out your preference. Okay, and again, within top, there are many other functions that are super advanced, and we'll talk about all of these. Okay, but again, one at a time. Okay. Let me see. Yeah, Joe, agree. Fine tuning is best done using the matrix. Fernando, how to use the implied volatility numbers in yellow at the top. Again, they are there. So if someone wants to use them, they can use them. To me, this is overthinking about it. Okay, I will just leave it in auto. So basically, this helps you visually to understand if the stock is going from boring stage to an active stage, or from a very active stage to a slowing down stage. So if you look at the implied volatility in the last 5 days, it's 7.5, and you look at the implied volatility in the last 20 days, which is like a month, and it's 13. So you can see on the last week, 5 days, the stock has been moving slower than what it was moving in the last month. So that stock is slowing down. So now this may tell you, okay, what if the stock was to now just remain slow until reaching target? So now you may want to simulate that by clicking update. Again, that's why those values are there, for you to have a visual of what's going on. But again, you are running many what if scenarios where there are other tools built in on top where running what if scenarios will be more efficient. And therefore, I would suggest that we discuss that in another session, okay? Because, well, this is there for a reason, and you could certainly use it, and it makes sense. Again, I would envision the majority of you to just leave it as auto and go with the flow, because probably, pretty intelligent to do that, okay? Joe, the fine-tuning is done on the matrix? Yes, indeed. This is the very beginning of everything, right? The matrix is how you find your trades. So in this case, in today's presentation, I was assuming you have a trade, you have a methodology, you set a target, and that's where everything begins with a strategy builder, okay? Good. Maka, any time frame when you'll be connecting top to additional brokers? It'll take a while, Maka. It will take a while. We have lots on our plate, so it will indeed take a while. But we will. Fernando, to place a paper trade in TRADDICTIV, all you need to log in is the sim. Yes, correct. So when you use top for TRADStation, you have to enter 2 username and password, isn't it? You enter your top username and password, and then you have a second window asking you for the TRADStation credentials, username and password, second time. At the time, right, the second time when you enter your TRADStation credentials, then you have 2 buttons on the right, which is live trading or simulated. If you click simulated trading, then top connects with your demo accounts on TradeStation. If you click live trading, then top connects to your live accounts on TradeStation. So in other words, if you are connected to simulated trading, as you described perfectly, Fernando, all your executions would be on the demo account, not on the real account. Okay. No, JLo, it doesn't show the IV percent. That would not be shown here. Yeah, that would not be shown here. Okay, because again, the goal of the strategy builder is not to tell you if the options are expensive or cheap. It's just to plan the trades for you. And by the way, by looking at the return on investment, automatically the trades that give you the best return are telling you what's going on with the options. For example, if I look at McDonald's, okay, take a look at what's happening here. The red line is above the blue line. What does that mean? The implied volatility is higher than the historic volatility. So there is a component of inflation of options. Options are not cheap. Now, I don't know how expensive they are. Let's take a look, talking about the 80% and the 20%. So I'm just now gonna plot that and notice how options are, let's say, about 70%. Okay, the orange line is 80%, so the blue line is a bit below, so let's call it 70%. So options are indeed not cheap. Now, they are not super expensive, but they are indeed not cheap. And you can see that in two different ways. The red line being beyond the blue lines, and also the implied volatility line here close to the 80%. Okay, so now this means options are in the expensive side. And because options are in the expensive side, which trade wins? The bull put spread is giving you a greater return on investment. If the options were to be cheap, then the bull call spread, which is debit, would be giving you a better return on investment. So the beauty of the strategy builder is that you just don't need to think about any of that. Of course, if you are an advanced options trader, you cannot take a trade without thinking about all of that, because that's what you think, because you are advanced. But the reality is that the strategy builder, even if you were to be very new to options trading and didn't even know something called implied volatility, and the fact that options change their values because of factors other than the price of the stock itself, so then next thing you know, the strategy builder is kind of taking care of you and keeping you on the safe side by selecting how much maximum risk you want and then sorting based on the return on investment. So it makes it very simple. It keeps you on the right side of the market, being an option seller or an option buyer, okay? And that automatically is taking care of the thing, right? Again, J-Lo, very good question. I love it. That's my thinking as well. So we'll talk about other tools on how to plan more advanced trades where we are looking at all of that as well, okay? Cool. Okay, so guys, we surpassed by 7 minutes the duration of our session. I have a quick question I need to answer because it was requested to me in an email. And Fernando, unfortunately, I don't have time to discuss today the Elliott waves, which, by the way, we need a pretty intense full hour to talk about this properly. Okay, so this will be subject of one day by itself. So I apologize for that. I don't have time today. Okay, but again, if you have some very, very specific question, email me. No problem, and I'll do my best to help you. By the way, I have received an email that you sent to our support team that they forwarded back to me. Very nice to receive an email from you in Spanish language, Fernando. That doesn't happen to me too often, so that puts a smile on my face. And I will get back to you, okay? I'm always, unfortunately, just a little on the delayed side with emails. Steve, as well, if you are listening to this live now or recorded, I also owe you an email. I'll be getting back to those emails. I always respond. Sometimes it just takes a little bit of time, okay? Bear with me, please. Very good, thank you. So anyway, so talking about that question I had, someone was asking me about how to use the position panel, and I just want to have a visual for you guys here. So I got multiple tabs, okay? So how do you create multiple tabs? You just click on the plus button and you give it a name. So I'm gonna call this one test, okay? And when you click and you give it a name, it's called test, and it's gonna be looking like a spreadsheet, and it's blank, there is nothing. So the question was, how can you put your trades in here and track your trades and work with your trades? So again, using what we learned today in the session. So let's say you're using the strategy builder and you are trading McDonald's and you decided 250 to 17 is your target, and you got all those trades and you sorted and you decided that you were going to use this particular trade, a bull call spread in this case, but even though we said maximum 500, I didn't do that. Okay, here we go. So now you sort, and now we are back to the bull put spread. So let's say you're gonna take this trade. So let's say you wanted to put this trade in your position panel. So what you do is very simple. You right click, and now you have two copy options: copy position to the clipboard or copy spreadsheet format to the clipboard. Okay, so the spreadsheet is for you to paste on a spreadsheet. Okay, if you plan to paste inside top, do not use the spreadsheet format. Just use the regular position format. So you copy position, and now you can just go back to your position, panel, and anywhere you can just right-click and paste. Okay, or just Control V on your keyboard. Okay, and here is your trade for you to track. Then you can even double-click and change the values at which you got filled. Okay, so you can track real-time results. And then, you can add or remove rows by either hitting the delete key on your keyboard, and this would delete rows, or the insert key on the keyboard, this would insert rows. Okay, and you can just adjust this however works best for you. And the beauty is that, so let's say you were looking at this risk profile, and that's it, you took the trade, and now you close all of these, right? You close it all, and then now the trade is running, and now you want to go back, and you want to monitor your positions, you want to make you want to make a change, you want to roll an option, whatever it is. So you can come back to your position window, and then you have your test tab. I'm going to go back. Here's the trade we just added, and let's say you want to reanalyze this trade. So you can go ahead and right click on it, okay, and you can bring it back to a risk graph. Okay, so you are back to being able to analyze your trade a few days after, and keep working on those sliders and see what happened, and even right click and edit the spread, and maybe you do something with a new option that you add here, and you click OK, and now you get to see the result. And let's say this is what you wanted to do. I'm just making this one up. This would not make much sense, but it's okay. So then what we could do is right click and copy this new position, okay, and then go back to the position panel and just paste it right under. So now you can track your original trade and how it evolved from a 2-leg position to a 3-leg position, and you keep tracking all of those into the future. And also something important to know, because if the market is not updating, so you will get weird readings. Okay, so what you may want to do is to right click and select based on the midpoint. So now those values with update, you cannot force an update, and then the results will be based on the midpoint. Okay, and you can, if you don't want to base it on the midpoint, you can always uncheck it, and now it's going to be based on the ask and the bid. But again, when the market is closed, it will give you values that may not make sense. Okay, so keep that in mind. So that's how you use it, and this would take me to the end of the session. So hopefully it went well today. Let me take a look at your comments before I say goodbye. Awesome session today. I'm learning more and more every day. Wonderful and nice to hear. Again, last week it was needed for us to talk about the pages. It was not the most interesting session, isn't it? But it was needed. So that's it. We got it done. Today was more interesting, I guess. Still in the basic side, but indeed, I mean, the strategy builder is cool, really. So, it could be the bread and butter of many of you, and some of you may only use the strategy builder, and that's all you do, okay? And it will not be wrong, okay? So, again, definitely a relevant session today, even though we will run more advanced sessions too, okay? Mark, very helpful session to understand this feature of top. Nice. Maka, amazing the amount of detail you've put in this. Very appreciated, very appreciated. Again, it's not only me, Maka. I got an amazing team of technologists building all these tools, and yeah, it's nice to have. Okay, I'll put it this way. So thank you for your words and your appreciation, and I will see you in the next one. The next time I'll see you guys in the sessions is on Wednesday, and That's going to be Options Trading Live, and the next one, looking at the platform, will be next Sunday. That will be our next top session. You guys take care. Thank you for joining me. If you're watching this recorded, a pleasure as well to have you watching this and being part of our community. Keep up the good work. Count on us. Shoot emails. Ask for help if you need to, guys. Let's work as a team. Let's go for it. And again, very proud of you guys. I receive emails from you on a regular basis, and I'm very happy to see your results and what's happening. So keep it up. Okay. Take care, everybody. See you soon. Bye-bye. Take care.